Trading is one of the riskiest businesses you can get into. There's not a guarantee that you'll make money, let alone that your trade that you placed will work out. I like to say that 50% of the time, trades go in your favor, and the other 50% of the time it doesn't. So with that information, 50% of the time that it doesn't go in your favor, if you manage risk efficiently and you use the right amount of position size to where if you add into the trade, you can get out at a small loss or break even or profit. And this approach is how I've been able to grow my accounts. It's how I've been able to pass my funded challenge. It's also how I've been able to show you guys a consistent approach on trading. If you go to my Instagram channel, there's a link in my YouTube, and also leave a link here under this YouTube video in the description. But if you go to that Instagram channel, you'll be able to see all of the trades that I took in order to get a good profit and in order to pass my funded challenge. The couple videos ago, I covered there was a video called The Fundamentals of Trading, and it was essentially going over support and resistance zones like such in uptrending and downtrending markets, right? So this is an uptrending market, and the opposite of this would be a downtrending market when the market is literally just going down. So using that information, you could effectively buy or sell into positions and make money on the market, whether it's going up or going down. But we're not even going to focus on that in this video. We're going to just focus on what dollar cost averaging is, which is a strategy that I use in order to grow my accounts and pass my funded challenge. So if you see my last video, I'm a funded trader. I'm actually a certified funded trader with Top Step. And it took me about, I want to say 6 to 7 months, maybe 8 months to pass my funded challenge, my trading combine. And that's just me learning how to size into positions effectively so that if the trade goes against me, I won't blow my account. I've been able to climb out of $600 and $700 losses in open drawdown on a prop firm account just from adding into the trade at specific zones and waiting on it to go in my favor. There are certain approaches and certain ways to manage risk efficiently so that if price goes against you and you decide to either close the trade, add into the trade, hedge, then you can always 90% of the time, at least 90% of the time, get out at a profit, provided you have enough capital in the account and your position size is small enough relative to the capital in the account. So I'm not going to keep this video too long. I'm going to simulate what I'm talking about here on gold futures. Let's just say we have $5,000 in the account and we're looking to grow that $5,000. We're looking to grow it to, let's say make another $1,000, right? So we're starting off at 0 USD, and let's just go to a calculator here. I'm gonna open up Google, and let's just go to a calculator here. Excuse me, I'm in school, so I'm gonna have a few tabs open. So let's say we have $5,000 USD in our account, and we're gonna look to make $1,000 profit using the approach that I'm talking about here, right? So $5,000, right? And we can almost just buy or sell randomly on the chart, right? Because this approach is essentially a dollar cost averaging approach, meaning that if it goes against me and at a certain level, I'm just going to look to add into the position. It could be at a support level, resistance level. It could be at any level that we feel like market is likely to reverse at, right? And we're just going to drop our average. So let's just take a buy here. And if price comes down to this level right here, this level indicated at 2,344, we're going to just buy again. Right? That's all we're gonna do. We're just gonna buy again. So we're risking about 840 to make around 840 using like a 1-to-1 risk to reward ratio. And if price comes down to this level, we're just gonna add it in again. Let's see how it goes here. So we just made $910. We barely used any analysis. All we did was buy or sell. Again, 50-50 chance this next trade could not work out at all. Right? We only have $90 to make on this $1,000 and this $1,000 profit target. So plus 910. Right? And we only bought one contract on gold on the 15-minute time frame. One contract on gold futures on the 15-minute time frame. We just made $910. Right? Again, if you're managing risk efficiently and you know the stats, 50% of the time it goes in a profit, 50% of the time it doesn't. So the time it doesn't, I'm going to look for a level to add in again so that it's going to give me another 50% chance that it'll work out or it doesn't. Eventually, you'll be right at least one time and you'll be able to get out of the trade at a break even, profit, small profit. But we're not even going to go that deep into that. We're not even going to go at a higher time frame because again, we're just trying to scale into the trade efficiently enough so that we don't blow our account and let's say a couple add-ins. I'm not sure what's happening here. Okay, just reset our profits. But anyway, we have it booked here. So let's go on the 1 minute time frame. Let's go down to A. Let's see if it's gonna show me the. Oh, that's odd. Okay, it's extremely weird. Let's remove this. That was weird. Let's move this. We're on a 1 minute time frame. And again, there's literally no market data in the past. So what we're gonna do, we're just gonna buy because we've seen it's a small uptrend. We're just gonna buy here. We put the stop loss down here. Okay, we're risking about, say we just want a 1-to-1. So 480, 490. And let's actually get rid of this. Let's put a support right here. Meaning that if it comes down to this level, we'll be looking to add into this position. So just play price forward. Let's see what happens. If it comes down to that level, we'll just add in again. Let's extend this out just in case if it goes to that level. This is the 1 minute time frame, by the way. Almost. I wanted to sort of like pierce the level so I can like efficiently add in. That way it'll drop the average enough for me to, get a decent price. There we go. All right, so we're just gonna buy again here. We're gonna move this down to around 470. We're gonna move out, take profit down. And we're just going to wait. If it keeps going against us, then we're just going to add in again. And remember, we're around $900 in profit right now from that first trade. Moving really, really slowly. There we go. We're out of the trade. Okay, so plus 490. Let's take a couple more trades. Let's do plus 490 here. So we started this account at $5,000. We took 2 trades and we've efficiently grown this account plus $1,400 basically. All right, 2 trades on gold futures. All we did was add into one of the trades and the other trade we were right. So again, like I said, it's 50-50 chance. We bought here, we set a 1-to-1 risk to reward ratio, and then we just sold to like, hey, we're just going to add in again right here. And if, if it works out, it works out. If it doesn't, we're just going to look for the next zone to add in. Let's take a couple more trades. And maybe we'll just see if price goes into drawdown. We can show you guys how to efficiently manage your risk. price forward just a little bit. Okay, we're getting some uptrending. So we're getting some buy vibes right here. So we're just gonna drag our stop loss down in here, just to show us what we're risking, like the point of invalidation. So I'm not actually using a stop loss. If you want to use a stop loss, you could, just to cut your losses short, and then you can add into the position again. Like, so you get stopped out, you got into trade, you put a stop loss there, you get stopped out, and then you just want to add into the position after you get stopped out. I feel like that could be safer, because let's say it hits your stop loss, or let's say you use an add-in position like a limit order right here instead of a stop out, and then it goes to that and it hits the limit order, but then it keeps going. If you would use a stop loss instead, then you just got stopped out, and then you would have found another level to then add in again, and then efficiently you're basically doing what you're doing here. But for the sake of this, I'm not going to do that. I'm just going to say, hey, if it goes down to this level here, I'm just going to add in again. Okay, so we won that trade, 740. I think that was around 210 in profit. I'm just going to say it was around $200, $210. So let's just say 210 plus 210. Let's try and get this account to like 7,000. But I also want to go into drawdown a bit, so we can show you like how to like, you know, just keep adding in basically, and just showing you guys like what happens if you keep adding in, and the the position size that you could use in order to basically grow your account. Again, this is a $5,000 account. We've already made $1,600 in just 3 trades. We're trading on the 1 minute time frame. So we're just gonna buy again here. Eventually it'll go against us. Eventually it will, for surely. Let's put our zone right there. So 240. Almost a 1-to-1. Let's just play price for it. Okay, so we're on a small little win streak, plus 240 here. Again, this is how, if you go through my Instagram channel, I'll leave a link in the description below. If you go to my Instagram channel, you'll be able to see the amount of trades that I've taken over like the span of 8 to 9 months, right? Where I've just basically taken profit and just added into trades, right? Basically the same approach. It's what I use to grow my accounts and also pass my prop firm. Granted, if you're scaling into the trades efficiently, on my prop firm, I probably only risk maybe 100 to 150 on each trade, so that if it goes against me, which it has in the past, then I won't be down. I would have had to add in maybe 4 times and it not working out, and then I will hit that daily loss limit finally. But most of the time, I want to say most of the time, it doesn't really work out like that. It has happened back to back before, and I have blown the account and I would just have to reset it. But most of the time it doesn't work out like that. So it would take you a bit amount of time if you're working with a prop firm to grow the account. Let's say you have a $50,000 account, and it would take you a bit of time to grow the account to $3,000, just risking maybe $150 to $200 each trade. But you could do it, and it shows signs of consistency if you're able to just, see how the market works, and at the same time just not confuse yourself with all of these different strategies and different modes of trading, right? You're just buying or selling whether price goes up or goes down. Price is going up, so we're just gonna buy. Price is going down, so we're just gonna sell. Price came down to this support, we're just gonna buy. Price came up to a resistance, we're just gonna sell. We're gonna short, we're gonna hold the trade. We're gonna set a 1-to-1 stop loss, risk to reward ratio, so that if it goes into profit, it goes into profit. If it doesn't, it doesn't. It's 50-50. Nobody knows what's gonna happen, right? Nobody knows. So this is the approach that I'm basically using to grow my accounts, all of my accounts, and I've been doing this efficiently and effectively for about 8 to 9 months already, and it's been working so far. It's just what works for me personally. It's what works for me. What works for you is what works for you. My motto on this channel is to keep things simple and manage risk. That's it. Just keep it simple, manage risk. And as long as you do that, especially the manage risk part, because what's necessarily simple to me might not be simple to you. This takes discretion, takes some sort of experience in the markets to understand, like, hey, I feel like this is a good level to put my take profit. This is a good level to put my stop loss. And if it goes against me, I'm going to figure out some way to just manage risk and get out. I may not add into this trade. I may just use a stop loss, or I may hedge, or I may close the trade and wait for it to come to another level, then add into that trade, right? So it's just ways of managing risk and, effectively doing that, and just, trying to just grow the account. So it looks like it's okay. It looked like it was finally going to go against me, but it didn't necessarily go against me. So I think we got this account to, I think it was like 210 or something. I don't even know. It might have been like 240. I'll just say 220. I don't remember. So we got it to $7,000. So we basically grew it to $2,000 in profit in about 4 trades, right? So that's basically the approach I just wanted to show you guys, right? Let's just take a sell, actually. I'm going to take a sell because market has been going up and we've been on a crazy win streak. So I'm just going to take a sell. I'm going to move our 1-to-1 up there. I'm going to risk about $300 on this trade. So let's just see what happens. So it's just trading sideways. It's just trading sideways. If it goes in about $340 and lost, then I'll add in again. Okay, so just our luck, I guess. If we would have bought here, then, and we would have maybe put our stop loss down to this level, then, or our invalidation or limit order down to this level, then we would have added in again. So let's just buy right here. Let's just see what happens. We have another level right here. I think that trade was for 340, 380. Let's just plus 380 right here. Plus 380. If it comes down to this level, we're just going to add it in again. All right. It's on the downtrend. We will likely blow this account. Let's just say, hey, you know what? I'm going to take my profits from this account. I'm going to just start off at $5,000. So efficiently, you've not necessarily doubled the account, but you've grown it $2,000 in profits. So let's just say you take maybe $5,000 out of the account and you keep the $2,000 in to trade with. You could do that, or you could just take $2,000 profit and just have the rest to trade with, so that you have a bit more leverage in the account. So this trade would have worked out if I added in at this level right here. This would have been my level to add in at, but like I was saying, I just bought randomly. I just bought here, and then it went up to this level. So efficiently, we're just dollar cost averaging, adding into trades, dropping the average, and then we're just, if it goes against us, we're adding into wherever we think it's going to reverse at. It's dropping the average, and if it goes up past the average price, then it goes up into profit, and then we can get out at either a break even or a profit. So again, I don't want to keep this too long, but we're at $1,840 in profit starting off for, I think the first trade was like around 940, and that was us trading on a 15-minute time frame. And then we just dropped down to the 1 minute just so we can save time and also manage risk efficiently, because on futures, the higher the time frame, the more you're risking, basically. So we're just using a lower time frame to risk less and also save time on the trades. That's also why I like futures. So again, 7,450, 7450, and we're just, that's all we did. Let's add into the trades. If it worked out, it worked out. If it didn't, it didn't. And that's how I efficiently grow my accounts and use dollar cost averaging to manage my risk. I don't really use a stop loss that often. I'll manually close my trades most of the time if I think that it's just not going to work out and I'm not willing to lose the full amount that I've actually risked on that trade. But if I get stopped out, I get stopped out. So I'm not really able to show you guys my Instagram channel here, but if you go to my YouTube link and then you click that link, you'll be able to see what I'm talking about. Just all the trades that I've taken over the span of maybe 4 or 5, maybe 5 or 6 months. I took some time off recently to not show you guys my trades because I was just really focused on passing my funded, and I would post trades here and there, you know what I'm saying? But ultimately, I just wanted to show you guys, hey, Using this strategy, using this trading approach, or any trading approach for that matter, it's possible to pass a funded. It's possible to pass the challenge and get funded. So currently, right now, I'm funded. I will be doing. It'll be a bit. I'll probably be more responsive as far as it comes to my showing you guys my trades on my Instagram and just my Instagram channel. So if you guys want to see that, then you guys can see that. But this YouTube channel, I don't really use it to show my trades. I basically use it to show you guys the strategy that I use and just the certain levels of psychology. For this specific trading approach, I feel like the psychology is more, it's less strenuous, because you know that you can either come out at a break even or a profit 90% of the time. In this case, I believe, let's just fast forward, it's literally 100% of the time. And if I open up the performance report, our max drawdown on the account on this specific, I hope I didn't just reset it. I did. Jesus Christ. Damn it. I accidentally pressed my space bar. But anyway, I think our max drawdown was maybe $340, $400 on this whole, 4 or 5 baskets of trades, and we literally grown the account to $2,000. So anyway, I say that to say that the psychology is a lot less strenuous, because you know that in your mind that, hey, I can come out of this profitable if I really choose to, and I'm sized into this trade good enough so that if it goes against me and I add in, it's not the end of the world. The only time I'll blow the account is if I add it in 20 times and it just keeps going against me and I've liquidated my whole account. So with that being said, I appreciate you guys for tuning in. Again, go to my Instagram channel, look at my trades, look at the videos that I posted, just scroll through and see all the trades that I posted. I also post setups and whatnot from time to time, but just go use this and just go and back test it. Go try it out. See how much profit you can accumulate in the amount of time that, whatever time span you're using. Go on the 15-minute, go on the hour, go on the 4-hour, go on the daily, and just use this strategy on a simulated account. Don't use it with real money. Just use it with a simulated account, and then try to transfer that knowledge that you've gained from trying this on the simulated account. Use that knowledge and then transfer it to a live account or a funded account, and then just keep repeating that process. Keep repeating that same process over and over and over again. Whether you're adding into trades, you're stopping yourself out, you're just closing trades. Maybe you're doing like a mean reversion, meaning that price goes really far in one direction, then you just short or you buy. There are no real rules to this. Just do whatever you want to do. Enter in randomly, flip a coin, do a random number generator, buy or sell, whatever. But then effectively manage your risk so that if it goes against you, you know how to get out. And that's what it's all about. So I appreciate you guys for tuning in. I'll see you guys in the next video. Thanks.